You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back. Indeed, I am back from the big options industry conference last week. Time to hold court on all things crypto rundown. Very exciting. My name, of course, Mark Longo from the optionsinsider.com, as well as from the network upon which all of you folks are binging these days. As I mentioned, pretty much right after I got off the show last week, I hopped on a plane down there to Asheville, North Carolina for the Options Industry Conference annual event. And as you might imagine, all things crypto, especially crypto options, was indeed a big discussion point down there at the conference. Luckily for you, it's kind of what I do. We recorded all those conversations, so those will be hitting the pro side first, as well as all of the panels from the conference. So if you couldn't make it down to Asheville this year, maybe you just missed a session. Either way, it's all hitting our network as well. I'll be hitting the pro first. So get on over to the pro, theoptionsinsider.com/pro. A lot of great content dovetailing into the world of crypto derivatives over there as well. So make sure you're checking that out. Congratulations to our pro member, Age Delaquarius, who just won the April Pro Trading Crate, one of our longtime pro members. So good to see those folks getting rewarded for hanging out in the pro for a long time. You want to get your name in the hat, maybe win the May Pro Trading Crate. Theoptionsinsider.com/pro is the place to go to learn more as we keep on rolling to explore and indeed learn who's joining us this week in the crypto hot seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, let's get to it. Let's roll out the Crypto Hot Seat once again to pick the brains from folks throughout the world of crypto derivatives and indeed beyond. And joining us on the old hot seat this week is a second timer. He joined us, I believe it was back in February of this year, so it's been a little bit. We are joined once again by Michael Dunn, the president over there at Bitnomial. Michael, welcome back to the Crypto Rundown program.
Hey, Mark, love being in the hot seat.
Not much going on in the world of crypto since we last chatted, so I guess we can just cut it off now. What do you think? Kind of a boring conversation. Nothing really to talk about, Michael.
What's Bitcoin and ETH? I don't even know.
Yeah, what is going on out there? No, of course, a lot has happened. You joined us last on the program back on February 26th. So we were still basking in the afterglow of the approval of the Bitcoin ETFs. All things Bitcoin and indeed crypto were hot again. We, of course, were approaching the halving. There was a lot going on in the world of Bitcoin and indeed crypto when you joined last. Now, fast forward a few months, a little bit of evolution out there in the space, including on your side of the fence there, Michael. In fact, since the last time we chatted, we also had the folks from Luxor on the program recently, just diving deep into the hash rate derivatives that you folks were planning on launching at the time we last talked. So let's start there. It's been a couple of months now under our belts there on the hash rate derivative side. Give us a bit of an update. Interesting time to launch it, of course, heading right into the halving. What are you seeing out here on these products so far, Michael?
Well, I can say that on the hash rate side, the launch was pushed back a couple weeks, so I'm not quite there yet. But what we do have is we launched our monthly options products, which means that you can now trade shorter duration options every month out for a few months, which is really exciting. I think we've seen a lot of big uptick there.
So you do have the options now. So give us an update on those then. Again, I just came out of the OIC conference last week. Everything short term, dare I say it, 0 DTE. That is the hot thing right now, Michael. I'm not sure if you're aware of that, but short duration, very much the hot thing. So catch us up on that. Maybe for those of our listeners who missed your last appearance, let's start there. What are these products we're talking about on the options front? And then B, give us an overview. What are you seeing? What kind of trends? And who's using these things?
Yeah, right. So we have our monthly short duration options on our physically settled Bitcoin futures contracts. So just as a recap for some of your listeners, our contracts are physically settled. So in futures, so when you take the contract to expiry, you receive Bitcoin, you pay dollars. And if you're short, you send that Bitcoin, you receive dollars. So when you trade options on top of that, the options, when expiring in the money, results in a futures contract that's physically delivered. So that's quite different than some of the other contracts that are out there that are cash settled. So what's really great is that the people that have physical Bitcoin exposure love these contracts because it allows them to manage the Bitcoin on balance sheet. I think if we discussed before, when you have Bitcoin on your balance sheet and you have a cash settled contract, okay, you have the price exposure maintained, but when you actually want to move the Bitcoin, you have to do another trade. Very sloppy. It's annoying for traders, and it can even cost you, depending on the slippage of the market at the time. So what we're seeing right now is we're seeing a lot of people using our shorter dated options contracts to basically sell vol. I think what they want to do is they sell the low delta puts and calls to do some basically premium harvesting that allows them to, kind of juice returns if they're depending on the kind of what position of the trade they're on. I think that's really exciting, and people are finally taking advantage of some of the strategies that have been around in derivatives for a long time, but now in Bitcoin.
Yeah, you and I have chatted in the past, and I misspoke at the top of the show. It's actually your third time joining us here in the crypto. You joined us back in November of last year as well. So you're an old pro by now, Michael. You know.
Yeah, that's right.
You know how this crypto hot seat works. But you're right. It's interesting to see some of the, shall we say, older option strategies. I mean, harvesting options premium is as old as the listed option contract itself, pretty much. So it is interesting to see some of the use cases going there. And you and I have discussed in the past the difference you guys are going for there with the physically settled, the physically delivered versus the cash settled. As I said to you before on the show, it seemed like we saw a wave of physical settlement hitting the crypto space a few years back. We had Bakkt getting into it, LedgerX. It seemed like it was the hot thing. Everyone was talking about the exact use case you're describing. They wanted to have the miners who were sitting on a lot of spot Bitcoin have a way to unload that, get a little premium with a covered call. Maybe also for traders out there to sell a put to get into Bitcoin. It seemed like chocolate and peanut butter, two great tastes that taste great together. Then we saw Bakkt kind of, I won't say wither and die on the vine, but let's say not put up the numbers that folks were expecting. Obviously, we all know what happened with LedgerX, some of that outside of their control. But it does seem like that took some of the bloom off of the physically settled rows out there, and people are now just shifting to cash settled for the just sheer simplicity of it all. So has that been any sort of obstacle for you folks, or it sounds like folks are actually gravitating towards your platform specifically because they want that component? They want to get their underlying either called away or put to them, Michael.
That's right. Well, I think that what's going on here is a big aspect of this industry, as you know, is timing. Well, especially with options, I guess, huh? And so I think a lot of the institutional hedgers are still just trying to figure out what it looks like to even run these strategies. I think, from us that come back from the typical commodities industry, these seems kind of like bread and butter, kind of no-brainer strategies. But I think the mining industry is still getting used to that. So there's a timing impact. And I think that timing is now. And, once you start to see a couple of these institutional hedgers or miners come in, they kind of all come in. I think the situation we're in right now, particularly post-halving, is a lot of the miners are kind of looking around. A lot of them are public, right? And so you can actually go and see what types of strategies they're running, how they manage their balance sheet. And I think all of them are realizing that there are really, really good ways to manage balance sheet risk, increase exposure or hedge exposure in U.S. markets specifically that they didn't have access to before. And I think they're starting to do that now. And just like you said, they want to go and write covered calls, earn some premium. Some of them even want to go and just monetize their spot BTC, but then go and then buy some low delta calls to increase their exposure. But they can do it in a cheap manner. Like, as you know, you just pay some premium and you have that on your balance sheet, which is really nice. I think that's a key problem to a lot of the miners right now is they have the Bitcoin, but they don't have a lot of dollars. So they're looking for ways to manage exposure with the tight amount of dollars they have. So I think, that's what futures and options are really good for.
It is funny to see the intersection blooming between these two markets where miners have a very traditional use case to any other commodity producer you might see out there. They need to hedge and maybe generate some income from their supply. On the flip side, you have the more traditional market-oriented traders and prop firms out there and speculators who want to get into this space, but maybe are a little bit more reticent on the underlying. So you have the miners and others coming to grips with some old school strategies, and you have the folks who are fluent in those strategies coming to grips with, let's say, a newer school underlying. So to me, Michael, that's always been the fascinating part of this show is the Venn diagram, where those two worlds overlap and what happens in between. And that seems to be firmly where you folks at Bitnomial are sitting right now, Michael.
I think that's right. I think one of the things that's been tough in this industry is that, like you said, you have these old traditional participants that were, didn't know how to deal with the underlying, and then the miners that do. And I think typically what they've done in the past is they go to OTC brokers and do kind of these bilateral deals. But, there's a lot of downside to that, right? So what happens when, you can't get an ISDA agreement signed or another agreement, between you and a broker? Well, that means you can't trade, right? And you also have counterparty risk. What happens if that broker, quite frankly, goes and goes and writes a bunch of puts in Doge or something like that, right? And they go under. A la Genesis or something like that, right? So there's a lot of worry about counterparty risk. And what's nice about our platform is that, you sign up with one of our partner FCMs, and then you can trade with anyone on our platform, and you don't have to worry about the counterparty risk in the same way because it's all intermediated by a centralized clearinghouse. So I think that's what's really great about bringing sort of the new style crypto miners in with the old school, I would say even market makers, liquidity providers, because we do provide that level of assurance with the positions. That's the way they can trade with each other. The spreads are tighter and everyone can manage the positions without having to worry about, their counterparty going under.
You and I have discussed this before. Obviously you're doing some bleeding edge stuff in the crypto space, like with these hash rate contracts. And yet on the flip side, you're also bringing some old school functionality to the world of crypto, which is, of course, as you mentioned, central clearing, eliminating the counterparty risk. There is a lot of advantages to that, especially for a lot of folks in the traditional world of finance who maybe are still a little bit reticent about dipping their toes in the crypto waters. Those kind of things, they help smooth the transition for them. It gives them the functionality and eliminates a risk that they're not used to dealing with. On the flip side, though, there's a lot of those folks, maybe on the mining community even, who are, shall we say, crypto native, who don't come from that world, who believe DeFi is the answer to all things, Michael. And so for them, maybe they will also want to trade some of the products on your platform, but maybe they're a little bit reticent about the central clearing. How do you bring those folks to the table? And what has the response been from the, shall we say, crypto native crowd, Michael?
Yeah, I think the crypto native crowd, I think it can be really overwhelming to decide what hedging and leverage tools that you can use out there in the crypto space, because there are just so many of them. But I think what we found is that a lot of the players look in the past and kind of look in the future about who's kind of the bankruptcy and who went under and who's kind of still around and what that looks like. And I think that everyone's kind of been burned in the past, with FTX and some of the big brokers going down. So I think there's an air to be on the conservative side. I think DEXs serve some purpose for offshore trading and things like that. But ultimately, I think when we want that security and that counterparty risk management and assurances, particularly if you're a public miner, you're going to be going down the route of a regulated exchange. I think that there is a time and place for decentralization, but I think that a lot of the customers that we talk to don't really have a lot of interest in that.
Speaking of those customers, obviously miners are the crux of it right now. They have the most embedded use case in what they're doing out there. But do you envision a time, maybe not right now because the product is still pretty nascent, but maybe down the road a little bit? You mentioned prop firms, maybe seeing some other non-end users coming in, dare I say it, speculators, maybe even down the road retail customers coming in and trading these like they would any other derivative or option product here, Michael?
Yeah, the way we view retail and speculative customers there is that we believe that a fully fledged market should be formed before those types of participants come in, right? And so what we want to see is we want to have a fully developed institutional market where hedging flow comes in, day out. You have your market makers there providing tight markets, providing a lot of liquidity, and it kind of have a very win-win trade is the way we say it, right? Someone comes and want to hedge risk. You have a market maker willing to take the other side. The price sensitivity is a bit lower because ultimately they're reducing the risk overall, right? That's a win-win trade. The way that I feel about retail and speculation is that it's not always necessarily a win-win trade, right? I think you have a lot of people out there that do want to speculate, but they'll kind of come in later when the markets are tight. They're going to look for, hey, where's the best bid, best offer? What's the ease of access? And I think those types of trades come in towards the middle or end of a kind of a market life cycle. And I think that's kind of what we're expecting to see here. So I think that the retail traders will come and come to participate in the most liquid market. And they're always looking for that. And I think no doubt they're going to want to have to trade the physically settled futures and options because, options are a great retail tool.
Well, the flip side of retail is, of course, institutional. I've often joked here on this show that institutional demand and indeed interest in crypto really seems to correlate very strongly to the price of Bitcoin. When Bitcoin's down around 10,000, they don't really seem to have much interest when we're in the depths of the crypto winter, shall we say. When it's back up here at these levels, 60 plus thousand, it does seem like more firms are at the very least crypto curious. So I'm curious from that perspective there, Michael. Obviously, they are the core audience for your platform. What kind of interest, what kind of demand are you seeing on the institutional side right now?
Yeah, it's high. I think what we're seeing post-halving is that the mining space is even more competitive. And I think that, the miners want to go and hedge their various risks. What's really neat about a centralized exchange and clearinghouse, like you were mentioning, is that actually allows the institutional hedgers to trade our Bitcoin and hash rate contracts together. So it's very typical in commodities to have what we call an intra-commodity spread credit, which basically means if you trade both legs together, your maintenance margin requirements can be reduced than if you were to trade those contracts individually. So really what we're looking to do is we're looking to allow for miners, for example, to sell hash rate, as you would imagine they would do since they're natural hedgers. They want to sell and lock in a hash rate price. And then while also convert some of their spot Bitcoin into long Bitcoin futures, that allows them to free up some liquidity on their balance sheet while maintaining the Bitcoin exposure. And then what you have there is that position combined can actually have a lower margin cost than individually because the risk can be managed together as a portfolio.
Well, you mentioned the halving. Obviously, the launch was planned to at least somewhat dovetail with that. We saw a lot of interest coming into it. Kind of a mixed bag coming out of it. I'm curious your thoughts there, Michael. How did the halving impact maybe the interest going into the launch, and what are you seeing now coming out of it on the other end?
Yeah, I think that the interest has peaked because of the it's peaking, I should say, with the halving. And I think really what's going on is that as our hash rate contracts really start to mature, the people are going to figure out how to use these contracts effectively. And so I think we're just kind of opening the floodgates here. I think they're going to start getting their feet wet, and then they're going to be able to hedge an even larger amount of contracts once they figure out how it works and once there's a little bit of price history.
As I mentioned, I just came back from the Options Industry Conference last week. It's a big get-together of a who's who in the world of options here in the U.S. And for the first time really in a while, crypto options were very much front and center. Obviously, we saw the Bitcoin ETFs approved earlier this year. And usually when a big product is approved, it could be an IPO, whenever a new underlying is listed, the options market here in the U.S., they've come to expect having options in their hot little hands. It used to be a few weeks. Now they've gotten it down to just a few days. Usually after an IPO or a big new listing, they'll have options available on that. The exchanges, at the end of the day, they're all for-profit public entities. So they want to make money. They want to give you the volume you want. And yet these ETFs were approved in January, and we've heard nothing, not a peep on the approval side for the options. So this was a hot topic last week. I'm curious to get your thoughts on this, Michael. You obviously have some direct experience on the crypto options regulatory side. What are your thoughts on maybe why we haven't seen these options on these ETFs yet? And as someone, again, who's spent some time dealing with that side of the space and still does, do you think we're going to see these this year or perhaps even ever?
That's a really great question. I think the thing to mention is that we are strictly regulated by the CFTC, and we actually don't have any sort of exposure to the SEC at this point in time. So I can't really speculate as to why the SEC may not want the options on the crypto ETFs. I think that's kind of a long-standing battle that's been going on for a while now. But I think kind of the benefit of the options that we have in the commodities world is that they're very basic. I think there's nothing really different about them. Bitcoin is a commodity. You can look at the price throughout time, and the way that the contract is structured, the option contract is structured, is very vanilla. So I think from a risk management perspective, I mean, you can just plug it into some formulas and know kind of what the 30-day historical vol is going to be. I think, you can look at the access here. So I think it's very straightforward. And I think that's to the benefit of commodity futures and options. And so I got to give the CFTC credit for getting these over the line and then making it easy for people to access them.
It is a strange world we live in, Michael, where the underlying is approved, but if you want to buy a put on said underlying, maybe to hedge your exposure, that is verboten. That is not allowed. That's too much risk.
Yep.
So I thought we had moved past that in the year 2024, Michael, but apparently, like we said at the top of the show, everything old is new again, including that means old regulatory outlooks on things that probably should be water under the bridge at this point. So, yeah, unfortunately, Michael, from the scuttlebutt I heard last week, it doesn't sound like we're too close to seeing these options being approved anytime soon. I guess good news for you, Michael. Fewer options out there means more people coming to Bitnomial.
I think so.
Well, we have to keep rolling with the show, but we like to leave our audience wanting a little bit more, Michael. So before we roll out of the crypto hot seat segment for this week, we talked about the options. I know we're looking forward to the future sometime in the quote unquote future. So if you want to give us an update on that, have at it. And then B, what else is up your sleeve over there at Bitnomial that may intrigue our listeners?
Yeah. Thanks for having me. And I think what we're looking for in the next year or so is obviously when we have hash rate futures, the evolution to that would be hash rate options. So definitely look for those to come down the line. That hasn't ever been done yet. I know that you were talking to Luxor, and they do have a bilateral market for hash rate, but they don't for options. So I think that's really exciting evolution to the market. But then, of course, I think Marco, we've always talked about crypto's collateral is what we're going to really be focusing on here in the next year or so. So definitely please follow us on LinkedIn and Twitter at Bitnomial and get the latest updates and keep track.
There you go. Give them a follow on the old social medias at Bitnomial. And we'll certainly keep an eye on you guys as well, Michael. And when we have some more products live, we'll certainly bring you back on to see how all these interesting new crypto derivatives are unfolding in the marketplace in the coming months.
Yeah, thank you.
All right, listeners, now it's time to keep on rolling. Let's see what's going on in these wild and crazy crypto markets. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, listeners, fascinating stuff. We always like to check out the new crypto derivatives products that are on the horizon here for you folks out there. More things to trade, hedge with, speculate on, all good things at the end of the day. Now let's see how all that goodness is translating into the world of crypto, shall we? Particularly with the big dog, Bitcoin. And you know what? All that goodness translating into a little bit larger this week than last week. Not quite 500 handles, but pretty darn close. We were at 62,880 on the show last week, right before I went down to Asheville. Coming into the start of this week, we're at 63,371. Puts us up nearly 500 handles, 491 to be precise. The high came, as it always seems to do these days, over the weekend, which again, all these people out there arguing about 24-hour options and stock trading, just bear that in mind. You might see a lot of exacerbated moves in the less liquid sessions, which tend to come in the after hours or indeed on the weekends, which is why we're seeing, once again, Sunday being the high for the week at 63,877. So fully 500 handles higher than we are right now. The low came last Wednesday. We did break through 60K, almost broke through 58K, got down to about 58,097 on Wednesday. So a pretty sizable range, over 5,000 handles, closing in on 6,000 on the week. So that's actually a pretty decent range. And yet when we fire up the old Amber data machine to see what's cooking out there on the Vol and Skew front, check them out for yourselves, amberdata.io, the place to go to kick the tires and light the fires, listeners. When we fire that up, that range, not enough to maintain the vol levels. We're at about a 51 on the 7-day, so the weekly vol. Coming in quite a bit. Last week it was 67.5, so over 16 handles on the 7-day vol. Again, 7-day, it's near dated, but again, we were just talking about short-dated options with our guests, so everyone's fixated on the near-dated stuff these days. So 7-day vol, arguably more important than ever these days. A 30-day vol, again, a more standardized vol metric, also coming in quite a bit. 68 on the show last week, 55 this week. So coming in 13 points. Let's go out a little farther. That's where we usually see calmer, cooler, saner heads out there. And they're also giving up the ghost on the vol. Maybe it's just that start of summer, listeners. It's May. Time to sell everything and go away until September, apparently, because the vol's certainly looking like that. We're at a 73 on the 180-day vol. Last week, 61.5 this week, down 11.5 points on the week. That's a heck of a vol move on the longer term side. So folks are apparently letting some vol go since our last show. Let's go out to the Skew side and see if any interesting surprises are waiting for us out there, listeners. And we got a little bit of evolution there. 7-day Skew was negative on our last show, about -2.5, so nothing crazy, but slightly negative. Now it has swung in the other direction to slightly positive at about a +2, so about a 4.5 point swing on the week. Going out a month, we were pretty much flat. I think we were a -0.2 on the show last week, so again, I would count that as flat. This week, a +2 as well. So same Skew on the 7-day that we're seeing on the 30-day. So slightly biased to the upside, but again, nothing crazy. Going out longer term, we're going out 180 days. It was 3.5 points to the upside last week. This week, +5. So a little bit more upside bias this week. So interesting evolution out there. I can understand the swing of the weekly Skew as we kind of rebounded from our lows on Wednesday. Might make sense that we'd see some positive bias creep in there. Getting a little bit more positive, though, a little bit longer term, which is interesting. In terms of positivity, is that also reflected in all the other Bitcoin options you folks can sling in your securities account out there? The answer is, well, again, it depends where you look. Let's start with Bitto, and the answer there is a resounding no, taken on the chin right now, 25.6 off 3.4 handles since our show last week. So, yeah, taking it a bit on the chin out there in Bitto. Seeing about 55,000 contracts on the tape right now. So kind of light. The ADV is 107,000. That's actually up about 5,000 from this time last week. So the ADV reflecting stronger volume. Let's see if we've seen a little bit more paper flood in since the start of the show. Shall we, listeners? Because at the start of the show, we were again hanging out at about 55,000 contracts. And the answer right now is we're up to about 63,000. So with about half an hour left in the session, doesn't seem like we're going to hit that little bit loftier ADV of 107,000. Speaking of about 62, 63, that's pretty much where the vol is right now. 62 as well, down about 5 points on the week. In terms of size positions, what's the big dog out there? It's still the Jan 30s, 107,000 of those bad boys. Looking a little bit worse for the wear this week, obviously, but they still have a ways to go. As it has been for a while, we're still 5-0 in the top 5 in terms of all calls all the time. Nobody wants to put in the top 5. We got the Jan 30s, number 1. Number 2, Jan 35s. Number 3, Jan 25s. Number 4, June 30s. And number 5, 24,000 of the Jan 20s. Intriguing stuff out there. Is Mara also feeling a little bit of the pressure this week? The answer is no. Mara just marches to the beat of its own drum, listeners. It's been a fascinating name to watch. We've talked about the vol out there, and we talked about the volume out there, and just the fact that it seemed like it's whipsawing between around 30 and around 15 over the last few months, and back on the upswing this week, 20.5 when we kicked off the show, up 3.25 over the last week. The ADV, though, going in the wrong direction, down to 228,000. It was over 400,000 not too long ago. Again, that's hard to sustain, and we've seen that out here coming back down. Still, 228,000. I think a lot of names out there would kill for that kind of options volume. In terms of paper, though, we were seeing a bit of a banger day today. So if today is any indication, we're probably going to see that ADV swing back in the upside direction, because we had 354,000 contracts on the tape already. By the time we kicked off the show, it's up to 388,000 now. So fully 160,000 contracts above that ADV. So I wouldn't be surprised to see that ADV swing up by the time we do the show again. And all this movement means the vol is managing to keep pace. So Mara managing to avoid the vol sell-off that seems to be plaguing a lot of the other products out there right now. 115 is the vol this week. That is literally unched from where it was this time last week. In terms of the top 5 positions in Mara right now, there is one put sneaking in there. It's at number 4, 18,001 of the Jan 7.5 puts. Again, we got down to around 15 recently. 7.5 seems like a bit of a ways to go, but we've seen crazier things. The number 1 position, though, right now are the June 30s with 29, almost 30,000 of those. Now, Mara, a bit of a different beast than Bitto. Doesn't have as aggressive. In fact, I don't know if it has any dividend. Let's pull it up right now. Bitto obviously has a very heavy dividend. Not the case out here in Mara. Yeah, they have no dividend yield to speak of. So no dividend out there in Mara, which could also make some sense why some folks are maybe a little bit more willing to go to the upside on some of these calls out here. As we keep on rolling, is it upside in the rest of the altcoin universe? Well, let's find out, shall we?
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
Let's keep the party rolling, listeners, with a little bit of top 10 action out here to kick off the altcoin universe. Will your favorite asset, will it make it into the top 10 this week? I guess we'll find out now. Shall we? Let's start at number 10. It's Cardano, holding out at 16.4 million out there. So that's what it cost you to break into the top 10 this week, listeners. 16.4 billion, excuse me, out there. 16.4 billion worth of market cap out there. So a fair amount, all things considered, out there. Obviously much higher than we were a few months ago when it cost you around 7-8 billion to break in. But let's compare it to last week, shall we? And it cost us about 16.2 billion to break into the top 10. So a couple hundred million more, a little bit extra bloom on the rose this week. Number 9, you know it, you love it right now. Maybe you have no idea what the hell it is, like a lot of our guests. It's Dunn. 20.3 million, I said it again, 20.3 billion worth of market cap on the tape for number 9 this week. Number 8, it's the ever mighty Doge, locking down the 8th spot, 22.3 billion worth of market cap. Number 7, it's XRP, 30.1 billion, because of course it is. Can't seem to get out of its own way. Number 6, USD coin, 33.4 billion. Number 5, it's Solana, 67.8 billion. Number 4, BNB, 88.8 billion worth of market cap. Number 3 is Tether, 111 billion. Number 2, it's ETH, 368, almost 369. And the big dog out there, Bitcoin, 1.24 trillion worth of market cap out there. What's cooking in the world of the number 2 digital asset? It's looking a little bit lighter than it was at the end of the show last week. Last week, we were at 31.76. Kicking off the show this week, 30.73, down 103 handles on the week. On Wednesday, that was kind of the nadir for the week for ETH as well. Got below 3K, 29.65. So bouncing a little over 100 handles off that low, but also obviously off of the high, which was pretty much during our show last week, 31.76. That's about as high as we got out there. So interesting range out there. Again, not enough to maintain these vol levels we were talking about last week. ETH 7-day vol was a 70 last week. Coming in to start of the show this week, 59. ETH 30-day vol, 70 and a quarter last week, 62 and a half this week. So again, the vol kind of coming off across the board, even going all the way out 180 days, 77 and 2/3. Last week, 66 and 2/3. This week down exactly 11 points on the vol front. So does seem like folks are not at all reticent about letting some vol go in May here to kick off the summer. I won't repeat the cliche, but you know where I'm going, listeners. Skew-wise, last week, 7-day skew was negative 2.5 in ETH. This week, it's still negative, but it has moderated quite a bit. It's about negative 3/4 of a point. So not even a full point to the dark side. Monthly skew last week, negative 2.5. This week, negative 3.5. So getting slightly more bearish, which is kind of interesting given the price action we're seeing out there. And 180-day skew was positive 2 3/4 last week. This week, gaining about a half a point at about positive 3 1/4. Let's get out to Solana. Solana having a pretty decent move since our last show. 134 and change last week, almost 152 to start the show. This week up about 17 1/4 points on the week. So pretty decent movement on the week. Not seeing a ton of vol out there right now. Again, we're still waiting for the data to really propagate over there on Deribit, for them to really start building out some of their open interest and term structure a little bit. So right now, we really only have a reliable 7-day vol measure out there, which is about a 93, down from 121 this time last week. So I think as we get more volume out there, we'll be able to fill in the dots on some of these 30-day vol and skew and everything else we're seeing out there right now. We do have some 7-day skew numbers we can pull, which was at a negative 8 this time last week. Again, makes sense. Solana was falling out of bed. This week, positive 1 2/3. So swinging nearly 10 points to the upside direction. Again, no surprise. We've seen Solana make a bit of a reversal out there as well. Let's run through the rest of the altcoin universe and we'll get out of here for this week, listeners. XRP is actually looking a little bit juicier this week than it was last week. Is this the beginning or just another head fake, listeners? You've had so many out there. I feel for all you XRP holders. About 51.4 cents on the show last week, 54.8 this week. So up about 3.4 cents on the week, listeners. Doge, 14.1 cents last week, 15.5 cents this week. So catching a second wind out there. Litecoin, 82.85 last week, 81.33 this week, down about $1.52 on the week. Cardano, 45.3 cents last week, 46.2 cents. So up ever so slightly, not even a full cent. Polkadot, 6 double last week, 7.21 this week, up 66 cents. And everyone's favorite Shiba Inu, ticking up ever so slightly, a million zeros, 0.23. Last week, this week, it is a million zeros, 2.4. All right, that is going to do it for the crypto rundown for this week. I want to thank our guest, Michael Dunn from Bitnomial. You want to check out what they have cooking? You can follow them over there on most of the social media platforms, just Bitnomial, or at Bitnomial, BITNOMIAL.com is the place to go. Kick the tires and light the fires and see what's going on with all these products they're talking about over there. We always love new products in the crypto derivative space, so keep an eye on them. And while you're keeping an eye on things, keep an eye on amberdata.io, the place to go to kick the tires and light the fires on all sorts of crypto derivatives analytics. And we really don't have time to just scratch the surface here on the show. There's so many other things. There's butterflies, there's shadow term structures, all sorts of fun. Again, we kind of just hit the bullet points on the show like this. That's all we really have time for. But if you want to see more, sink your teeth in for yourselves. Amberdata.io is the place to go. We got to get on out of here. Back again tomorrow with our good buddy, Mr. Uncle Mike Tusaw, tackling a lot of your questions. If you want to put them to him, theoptionsinsider.com/pro is the place to go. Congratulations to our pro member, Age Adult Aquarius, for winning the April Pro Trading Crate. Get on over to the Pro if you want to put your hat in for the May Crate. And then back with our usual array of content throughout the week, including a lot of great educational content, like indeed Options Bootcamp on Wednesdays. Get that wherever you get our full network feed, listeners. And then back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.